Housing Director confirms administration working on a 50-year mortgage after Trump hint.
Oh, my God.
50-year mortgage? Yes. 50-year mortgage. What would it look like? Go ahead, Rob.
Trying to find an answer on affordability for housing, which right now we're seeing one of the worst housing markets that we've seen in recent times. And so the 50-year mortgage is a play to lower people's monthly mortgage payments. But the downside is, especially early on, all of that payment will be going to interest. And of course, since you're paying over 50 years and not over 30 years, you're going to be paying off that mortgage for a lot longer. So the details are still to be worked out, but it looks to be like the president's looking for a quick fix to a market that is fundamentally broken right now.
Okay, so this guy's a Democrat, right? Because you see in the back, if you zoom in on the books, you'll see the New Deal. Go back a little bit, right? You see it to the left, he's got the New Deal. You can always tell what books they're reading. Yeah. Okay.
Crash.
Do you know, while this guy's saying this, it's so funny. Do you know who came up with the 30-year mortgage?
Who?
Do you know who came up with the 30-year mortgage?
that?
I want you to think about, can you right there, Rob, can you pull that up? Here's who came up with the 30-year mortgage.
FDR?
Yeah, FDR came up with the 30-year mortgage. So did you say the same thing back in the days, fellow? I don't know what your name is, but, well-spoken guy a minute ago.
Crashed.
So he did 30 years. Trump's going to 50 years. By the way, Tom, the question is, if you're a bank, would you get into the 50-year business game? Would we do that knowing you're collecting the interest up front? Would you entertain the 30 versus 50? Because how do you set it up? You still have to find a way to make it profitable for the banks, right?
Right.
So the bank has to get their money, or else there's no incentive for them to want to sell this loan, okay? What would be the incentive for banks to sell 50-year loans?
Well, as long as they felt that the underlying asset wasn't going to drop. Now, so here's what the bank has to do. Your house is a collateral. You stop paying, Vinny, I'm going to take your house. I'm going to sell it to the next guy. Mm-hmm. That's what a bank will do. We'll auction it. He'll auction it off. Now then, what it means, Pat, is the first 10 years of that 50-year loan, the bank has to underwrite it and be comfortable that that house won't decline in value. You follow that? Because not much will be paid off in 10 years, Pat. Not much at all. So if you and I, Tom and Pat's bank, and we do a 50-year mortgage, our underwriting has to say, are we sure that house is not going to go down in these first 10 years?
Yeah.
Because if we have to seize the house and auction it, we got to make sure that that house is worth more than the loan's worth. So it makes the front end underwriting has to be more certain for the banks. But I just did a little analysis. 30-year, $400,000, 6.25. $2,462 is the payment. 50-year, 6.25, $400,000, $2,179. So about a $300 difference on a $400,000 mortgage. However, next to no principal is paid off in those first 10 years. Very little. And then it accelerates. So for the banks, more people will qualify using standard, ratios and measurements, but the bank better be sure that those houses don't drop in those first 10 years.
Rob, go back to where you were at right there a minute ago. Watch this. So this is 30-year payment, 30-year loan, 360 payments. Your main payment will be $2,684. Total interest paid for was $466. 40, $2,400. So you save maybe $150, $130. No, you save $270, and eventually end up paying $658,000, $200,000 more.
A scam.
And then 50 years is $2,272. Which is $142 less of the 40-year, and you end up paying $863 long-term. So,
what's the price of the house?
Yeah,
is that based on $500,000? What is this?
I think
and
that's a $500,000 loan. It's a $500,000 loan is what you're looking at.
So it's a $500,000 house.
So
what's the interest rate that you put on this, Rob? 6%?
5% fixed.
Yeah.
Okay, but it's not even 5% right now. Gotcha. What would it be on a 15? What would it be on? Okay. PBD. I mean, you already know where I stand on this. What you're doing. I know you're running your numbers. What are you thinking on this right now?
Well, here's the thing, Adam. I've never lost money buying a house because the math on buying a house is the following. Here's the math on buying a house. Okay, let's just kind of do. If you just do the flat interest, you're not making a lot of money. If I buy a $600,000 house, how much down payment am I putting on a $600,000 house, Tom? If I got a 750 credit score.
A $600,000 house, you'll have to put down about
10%?
120.
20%. Okay.
20% you have to put down?
Okay. Let's just say. Let's just type in Rob. If I have a $600,000 house, 750 credit score, how much down payment would I need to put down? Can I do 10%?
Vinny, my boy Vinny's going to get a
Yeah,
VA.
like
So-
there are some states who give you a first-time home.
Yeah,
buyer
that's what
for
I'm.
10%.
First time. Let's just say 10%.
Yeah.
So if I do first time, I'm putting $60K down,
And
right?
you have to pay P&I.
So I'm financing 540 is what I'm financing. Okay. So now, what is the rate of return on real estate the last decade?
5%.
Okay.
If that.
But what I'm saying is fine.
Sure.
Go 5%. If we do 5% on that 600K, 5% on 600K over 10 years, 6 to 7% average. Let's take 6%. Okay. So what is the price of this $600,000 house come 10 years from now? What's the price of this $600,000 house come 10 years from now? At 6%. So say if I bought a $600,000 house and it grows at 6% every year, what is the property value 10 years from now? 7% will be 1.2 million. So I'm probably going to say 6% is going to be
Just under $1 million.
980. Let's just say
Just under $1 million, I would say.
980 is what it should be. 1,074,000
Right,
dollars. Okay, so $1,074,000. You just made $574,000 on that money. Okay, $574,000 on the 600K. You put $60,000 down. What's your monthly payment on that, Rob? Just say, what is your payment on a $540,000 loan at 6%, 30-year fix? Let's just not even say 30-year fix. Tom, let's say we do a 10-year adjustable.
Yep, I'm doing it.
Do a 10-year ARM, okay? 10-year ARM. So 540.
Vinny, an ARM is an
6%.
adjustable rate mortgage. It's not a working out
Gotcha.
bicep. Gotcha.
So what is the payment on that? Everything 32, 30. So let's actually do the math right now. So I'm and then Rob, can you do me a favor?
I just did it.
ask what is the rent? What is the average rent nationwide? Okay, what does a $600,000 house average get in the country today? We're gonna actually do the math very deep right now.
I
Adam.
love it.
So go. What is a $600,000 budget get you? How big of a house does a $600,000 budget get you in America on average? We're not saying Toledo. We're not saying Beverly Hills. I'm saying Toledo.
How big
average.
of a house?
Yeah, like I'm getting married. I got a wife and kids. I want to have a family. How many bedrooms is that? 2576. Okay, 2576.
3 bedrooms.
I think that's 4.3. I think that's 4.3. Okay, Rob, can you then ask the following question? What is the average rent for a 2,576 square foot home in America? We're getting very deep. If you notice what I'm doing right now.
Exactly.
Okay, because I know where you're going, and I'm going to do the math as deep as you want to go with this here right now. So the average rent is what? $1,754. Okay, so now notice the $1,754 for 908. So what is the average rent for?
What does that say? 5,900. What is that?
5,900 rent. Holy shit, that's a lot.
Extrapolate.
2,500 square foot home, though.
Okay, I that's a lot of rent, Rob.
Holy moly.
So why don't we? Damn. So I don't think it's going to be 5,900.
Or mortgage.
No, I want to do rent.
Okay.
What is the average rent for a 2,570 square foot home in America? Give me average, not high or low, but average. Okay. I don't know if you're getting this number or not. We're getting to the bottom of it. This number, that number should be $2,100. Still saying the same number, right? It's telling me the same number as well. What number do you guys want to pick? Let's pick a rent.
I wrote 1,900 before it came out because that's the stuff I've been reading.
Okay. Can we just say it's $2,000 a month? Let's just say the average rent right there is $2,100 a month. Let's go with $2,100 a month. Okay. So what's $2,100? What's 3238 minus 2,100? 3238 minus 2,100 is 1138. Now take 1138 times 120 because you know what I'm doing. Adam, are you tracking or no?
I'm doing some numbers here.
1138 times 120, Vinny, is...
Vinny's face. By the way,
you guys cut. You guys
stop. Just stop.
Are you guys still? I'm gonna come
No,
back
but
down
do you know
here.
what we're doing, Vinny? This is very
Vinny's
important.
face was like this.
So
No,
watch
I'm
this.
tracking 'cause
But
I'm
watch this.
paying
So here's
big
where I'm
ass
at now.
rent.
Here's where I'm at now.
Yeah.
I'm at 100. I'm
Extrapolate
just
it.
showing you this. We're at 136,560. Okay. So if we take that 6% concept, that the value of real estate makes an average return of 6% every year, over 10 years, your $600,000 house you bought will be $1,074,000. $1,074,000 minus, minus, can't believe we're getting this deep in a loan, but let's do it anyways. Minus $600,000. You've made $474,000 in return. If I take $474,000 minus, Vinny, $136,540 that you would have paid at a 2,100 rent, 10 years later, owning a home would have gotten you $337. Let's add the $60,000 down payment to it as well. I mean, you're making $397,460 buying a house versus renting a house over 10 years.
But let's go deeper.
Go.
Let's extrapolate it, Adam.
So-
Go ahead.
Your argument, or not your argument, the argument is you're not going to lose money by buying a real estate. It's almost like buying a bond.
There's a lot of caveats, buddy. So, but I want to hear you. Go ahead. Make your argument.
So, what's a better
That's
rate?
another
of return?
3-second
What's a
pause.
better?
You're on
You're
like
going Bidenville,
guys,
bro.
get this guy some brain.
You're gonna,
To be honest with you, I
you're
haven't
gonna
had
start
my coffee
shaking
this
hands with
morning.
the camera.
It was Rory's 13th birthday. I went all out yesterday.
Go ahead,
I'm struggling
tell us.
right now. You know that. The argument is not, is buying a house a good investment? It is a okay investment. I'm not shitting on the investment. I don't think it's a bad investment. I'm not recommending that you don't do the investment. I'm saying if you're
but
if
stop,
you're solving for
stop,
rate of return,
stop.
Sure, go ahead.
Stop. Based on this argument,
Sure.
we did it as
Technical as
possible.
Yes. Correct.
I'm willing to bet we lost viewership right now. Let me just see
I
where
don't know.
people are
They're
probably like,
extrapolating. I think
there's a lot
stop
of people-
talking about this.
there's a
I don't
lot
want
of
to
people
talk
that
about
gotta
this.
figure out what the hell they're doing
I'm
with
telling you
housing.
right
Yes.
now, Adam.
Yes.
Okay. This is my advice to people. If you're in the area where you're working for a company, like if I'm working for Marriott, say I'm working for Marriott and my goal is to be a general manager running a hotel one day. Guess what I'm not doing for 10 years? I'm not buying a house.
Correct, because you could be moving around.
I'm going to be moving.
Fully
We're
agree.
opening up a new Marriott in London. Do you want to go? No. I'm not going to get stabbed, but I'll go to Dubai, right? Do you want to go to a new Marriott that's coming? Yes. If your job requires potential promotions to move. For me, when I was PHP, I know I'm moving. As crazy it is, I bought a house eventually in that community that we lived in, Trammell Estate. You've never been to it. Tom has been to it. I bought the cul-de-sac. And I bought it right next to the Barry Bonds agent. So we love this community. There's 21 homes. I rented a house in the community. I bought the house in the corner. 2 years later, I'm leaving. You remember that time? 2 years, I'm like, shit, I'm going to Texas. I still made $200,000. I still made $200,000 when I bought that because it was prime property, cul-de-sac in a gated community with only 21 homes. Then we go to the house in Dallas. You've been to our house in Dallas. Did you go to both of them or just one of them? Did you go to the other
Dallas?
house? The 4-story, 15,000 square foot home? You didn't go to that one.
I didn't go to that one.
Okay. So the one, but the other one you went
With
to,
the pool-
right?
with the pool table.
Yes. The other one you went to.
Yeah.
We made money on that one. The
of
house
course.
we bought here, we made money on this one. If a person's buying long term, you have, like, if this is what I did for a living financial advice, you're sitting down doing the math with them. When you get to the bottom of it, the question is simple. Are you planning on living in this place for 10 years? Yes. Then I would lean more towards buying than renting. If you tell me no, then I would say pump the brakes.
Yeah.
That's really how simple
We are
it is.
fully on the
Yeah.
same page. Fully on the, I have zero disagreements. So my contention is never don't buy real estate. I've never said that.
This
I
is
said,
as thorough as a breakdown we could have done for the
Can I ask you
people
a
that are
very
watching.
specific
Yeah,
question?
of course.
If you can put these three, your PBD's money. We know 150 million ain't what it used
It
to
ain't
be.
what it
Yeah.
used to be.
PBD's money. If you could put the following three things where you've made the most money:
No, it's not close.
working on a business, your stock portfolio,
That's a different conversation.
or your housing portfolio.
Yeah.
What rank those three
But
for you?
I'm not everybody, though.
I'm saying for you. I want to know you.
I know. A guy asked me if you could define yourself with one word, what would it be? And it can't be politics or family, non-family. I said operator.
Mm-hmm.
I love the day-to-day grind.
I agree with you.
You know, since what time I've been at the office today? You don't even know what time I've been at the office today. Yesterday I was at Naples. Dylan had a game. I went to the championship, coming back, and I've been dealing with a bunch of chaos this weekend. PHP was here the day before Saturday. 7:45, I'm at the office. You know what time my Saturday ended? You know what time my Saturday ended? 2 o'clock in the morning. My day started Saturday, 7:45 in the morning. It ended Sunday, 2 o'clock in the morning. I come home Sunday, 2 o'clock in the morning. Then I got to get doing stuff with the kids to go to the. So I'm back and forth. But I freaking love being an operator, right? But that's not everybody. If somebody's watching this right now who has a job making $82,000, your wife makes $59,000, they're trying to make a decision. Do we listen to the people that are saying it or not? And you know there's not going to be a massive amount of changes in your life the next 10 years. Massive. If there is, then you have to adjust accordingly. But if you know it's going to be, I'm going to be with this company long term, I love it here. This is what I'm going to be doing. This is the industry I'm going to be on. This is the city I'm going to live in, probably within a 5-10 mile radius. Then guess what? Lock it up and get something if you can afford it. Because and then, by the way, guess what else you have to be thinking about? Never has there been more important time, Tom, to buy a house in a community, in an area based on politics than today.
Oh, man.
Do you know what just happened right now with California and Texas? Folks, let me tell you what happened with California and Texas. This whole thing with the elections and all this stuff that they're saying going into midterms, do you know what California and Texas just did with redistrictings? You know Prop 50 and what Texas did? Do you know what they did? Guess what's going to happen? Texas protected themselves. We're going to stay Republican for many, many decades. Come do something about it. And you know what California did? We're going to stay Democrat for many, many decades. Come do something about it. A-Rod's being interviewed, and he's being asked, what areas do you buy properties in? And he says, red states. Why red states? Because people are moving to red states. What are red states? Pick them. Pick them. Tennessee, Florida used to be purple, now it's red. Texas, what are you investing in? So, you know, these are the types of decisions you got to make with your family and say, where are we going to go buy a home long term? But if it's 10 years, I'm banking on buying a home instead of renting a home, because 10 years later, that family is going to have an additional $400,000 of net worth added to their name that they wouldn't have had. Tomorrow's Veterans Day. And what we want to do for the veterans who are watching this, we have a whole new series of merch for veterans. Rob, if you can zoom in into some of these guys here. Whether you're Army, we got an Army Future Looks Bright. We got, go a little bit lower, Rob, if you could. We got those hats with the Velcro. That right there, the Army Future Looks Bright patch is insane. Go lower, Rob. You know, Air Force, Navy, keep going, keep going, keep going. We got those green hats.
Oh, that one's
Those
sick.
green hats, they won't last long. No. Every time we have those, they disappear.
That's badass.
The one on the right, it's absolutely sick. On the front of it, it says Future Looks Bright. U.S. Armed Forces, Marines, keep going. And then you have the USA hat. That's another one. It's one of our most, I think it's the top 5 most reviewed hats of all time that you have right there. The USA with the, what do you call it?
Camouflage.
The camouflage on there. Armed Forces in the middle with the dog tag. 6 shirt. Keep going lower, Rob. Keep going lower. And you got the Army greens. The hats in the middle. And then go to the next one. That Angry Patriot shirt to the
Nice.
right. You got a bunch of stuff here. And here's what it is. Go to vtmerch.com, place your order, use the code VETERAN for a discount, VETERAN for a discount, and 10% of every purchase made will go to charities that are related to folks who are serving, and we have a handful of them that we're working with. Trust me, we're very selective on which one we go through. 10% of whatever purchase is made will go to different charities out there, and if you use the code VETERAN, you'll get a 10% discount as well. Some of those items are, limited supply that we ordered. So be sure to go out there and place the order for yourself. And if it's not you, you have a friend that went to the Air Force, the Army, the Marines, the Navy. You know, gift them something from this that watches the podcast. Again, go to vtmerch.com, place your order using the discount VETERAN. If you enjoyed this video, you want to watch more videos like this, click here. And if you want to watch the entire podcast, click here.